Hey guys, hope you had a great holiday weekend. This is Taylor from thetradinganalyst.com. We're going to discuss the general market here. We're going to be looking at the S&P 500. I'm going to go over exactly what you can expect for this week moving forward. I'm going to start from a broader picture. As you can see, I have on the chart right now about 2 years of action, and then I'm going to zoom in and discuss the more recent action and give you some specific levels and things to look for this week to make you money. All right, so let's get started. So S&P 500, this is about 2 years of action. I want to go over something. What we have here is, and I've discussed this in prior videos, so bear with me if you've already seen this. I am going to discuss the more recent action. What we had here is a break over a pretty big resistance. Okay, here's that resistance right here. That was in September of 2018. Here's about May of 2019 we hit it. We hit it once again in about June of this year. And then we finally broke over it. Okay, we held over it for a few weeks, and then boom, we broke right under it. Okay, so that makes this a false breakout. All right, last time we kind of did that was over here. We had this resistance there, here. We broke over that, held over it, and then we broke under it, and we headed much lower. Okay, that doesn't mean it's going to happen this time. I'm just kind of pointing that out, that did happen previously. Okay, now, even though this is a false breakout right here, we're still making higher lows and higher highs. Okay, for example, we've got a low here, here's a higher low here, and then a higher low here. Okay, higher lows. We've got a high here, and then a higher high here. And we did just recently break to new all-time highs. Okay, so you got to keep that in mind. Now, kind of boiling down to the more recent action, you can see that we've just been trading sideways right here. And I'm going to tell you exactly what you need to look for. Okay, and I'm going to discuss that right now. So actually, in order to show you what we need to see, I'm going to show you examples of when it has happened previously. Okay, so what you need to see in order for the market to bounce, it's very simple, so pay attention, okay, is 3 consecutive, okay, 3 days in a row. Okay, it doesn't have to be Monday, Tuesday, Wednesday. It could be Thursday, Friday, and Monday. Okay, it doesn't have to be in the same week. Okay, it just has to be trading days in a row. Okay, 3 consecutive closes over the previous day's high. Okay, I'm going to repeat that because a lot of people get confused and they think you just need 3 green days, 3 higher closes. That's not what you need to see. You need to see 3 consecutive closes over the previous day's high. So not only does it have to be a green day, a green close higher than the previous day's close, but it also has to close over the previous day's high. Okay, so these are 3 very, very strong days in a row. All right, so I'm going to show you the last several times this has happened in the market. Okay, and this is just looking back at a year of action here for the market. Okay, so you can see on this bottom down here that we made in January, we got, and oftentimes you can see that it doesn't happen right away. We don't get 3 closes over the previous day's high in a row down here, but we did get it over here. You can see 1, 2, 3 right there, and that started a huge move higher. Okay, you can see this bounce right here. We saw a little dip in the market right here. You can see 1, 2, 3 days closing over the previous day's high. All right. The next time that happened was this June bottom right here. 1, 2, 3 days in a row. All right. Now, boiling down into the more recent action, you can see that we have not done that yet. Okay, and there's a reason that we need to see 3 closes over the prior day's high. Okay, and that's because this is what comes with almost every single market bottom. Okay, I've back tested this going back to the 1990s. Okay, so for almost the last 30 years, I've studied every single market bottom. Okay, and 99% of them come with a 3 consecutive closes over the previous day's high. Okay, and that's what happens. It's about how the market starts its bounce. Okay, normally it's coupled with some kind of news event or something like that. For example, last time over here, the thing that's going on right now that's big in the news is the trade war with China. Okay, you saw the dip here in May started with some negative headlines regarding the trade war with China. We headed lower, and then you started seeing some positive headlines regarding the trade war with China, and then we saw a strong bounce here. Same thing over here. We saw some negative headlines regarding the trade war with China, so we headed lower, and we haven't really seen much positive headlines regarding the trade war just yet, so we haven't seen a 3 consecutive closes over the previous day's high. And I want to be very clear that all you're looking for is 3 closes over the previous day's high in a row. It doesn't matter if there's news or no news. Okay, so really pay attention. This is a price action only. I did discuss some news, but the strategy here is only based off of price action. So no matter what's going on with China or North Korea or Russia or anything that's going on, the price action is what matters the most. Okay, so we haven't seen that yet. The best we did was right over here. We did 2 closes over the previous day's high. You saw this one, 1, 2, and then what happened? Boom, we just failed. All right, and then last week we had boom, 1 close over the previous day's high, and that was it. Okay, the next day gapped up, higher high, higher low, but this day did not close over the previous day's high. So now we're back at square one. All right, and we're still within this sideways chop range. All right, the sideways chop range. And notice here where we keep on getting rejected. And this, I want to be very clear also that this isn't saying the market is heading lower. Okay, I don't have a crystal ball. I'm not, I know a lot of people out there like to think that they can predict where the market is going to head. I have no idea. I'm just being very honest with you. But I do know that if we see 3 consecutive closes over the previous day's high, that we have a 73% chance of heading much, much higher. Okay, not just a little bit higher, but much, much higher. Same thing how we did down here, the January bottom and the March bottom that I showed you earlier. But back to this level, okay? This level up here, 2940, where we keep on getting rejected, is that same level. If I go back, here we are, is that false breakout level. Okay, here's that resistance here, there, here. We broke over it here, broke back under it, making this a false breakout, and then boom, we just keep on coming up and testing that level. Okay, same level. Okay, that's why it's important to have these levels drawn on your chart, because a lot of people kind of forget about levels. Even if they break over the support and they break back under, they think that level is totally invalidated, and they stop paying attention to it. That is a big mistake. You need to keep on paying attention to this level because this is huge. Okay, so again, this isn't to say that we can't head higher, but we need to see 3 consecutive closes over the previous day's high in order to head higher. Okay, and again, I want to be very clear that this is only for the S&P 500. Okay, the NASDAQ and the Dow, oftentimes they have, the NASDAQ especially, has 3 consecutive closes over the previous day's high, and then it ends up failing. So this back testing that I've done is on the S&P 500 only, okay? Not the SPY. Look at the SPX, okay? And this is going to give you a great barometer for the health and strength of the market. So again, 3 consecutive closes over the previous day's high. Until then, you know, it's going to be in a chop range. We could head a little bit higher, but really we need to see 3 consecutive closes over the previous day's high. And it's not just an arbitrary thing. if you just kind of simplify it, what you would see with 3 consecutive closes over the previous day's high is 3 really strong buying days. Okay, just for example, just like over here, we saw 3 really strong down days, and that was the start of this big move lower. All right, again over here, 3 really strong down days over here, and then boom, we headed lower. All right, so it works in both directions. It's just how the market works. Okay, you're not going to head higher in the market significantly without getting several days in a row of very strong action. Okay, that's just not how it works. Okay, so that's basically all I got. We got to break over about 29.50. Got to break. Got to have 3 strong days in a row, and that is going to really set you up for success in the market moving forward. So what you're looking at right now is the real-time portfolio tracker that we use at the tradinganalyst.com to track every single trade that we make and alert to members at the tradinganalyst.com. All of the entries that you see here are alerted to our members in real time via text message. All of the exits are alerted to members in real time via text message. Most of these plays, about 90% of these plays, get put onto a watch list that when you join, you'll be able to see as well. So you're able to be prepared ahead of time for these trades. We're not just throwing out alerts to you and hoping that you can follow along. If you watch the watch list, you're going to be prepared for these trades ahead of time and often can make the trades on your own before the alerts come out. But regardless, we always send out an entry and an exit alert in real time. So as you can clearly see, these alerts are very profitable. Okay? When you join, you'll be able to make money alongside of us too. You can see here in the last 12 months, or I think it's about 13 months now, that's when we started using the portfolio tracker to track all of our trades. So in the last 13 months, the portfolio tracker has gained, and this is not a total account value, this is actual profits, all right, $314,000 tracking all of these single trades, all right, every single trade, the wins, the losses, the break-even trades, everything gets put on here to the portfolio tracker. We also have an open position list as well on a different sheet. I'm not going to show that to you today because that is only for paying clients and members at the tradinganalyst.com. So if you'd like to start making winning trades right away this week, then you need to join the tradinganalyst.com, and I'll start sending you these alerts every single day. All these entries, every time I put a trade in, I'm going to alert you. I'm going to text you right away. You're going to know the exact entry price and the exact exit price, taking all of the guesswork out for you, and I'm going to do all the hard work for you so that you don't have to, okay? And you can rely on an expert to help you make that side income in the market. So if you've been struggling to earn money in the market, either now or total, this is a great opportunity to dig you out of that hole. Okay, we do well in up markets, down markets, choppy markets, you name it, and we are profitable over the long haul. We don't win every single trade. That is an unrealistic expectation. So if you want to win every trade, you need to join some other service and get disappointed by them because I don't need that action. But if you want to make consistent returns in the long run, then you got to sign up and join, and I would love the opportunity to help you. So I hope you make that decision for yourself, and I'd love to see you inside the membership. If you have any questions about the membership, about joining, or about anything I discussed in this video, please feel free to reach out to me. I'll be more than happy to chat with you. Have a great week. Remember, those 3 consecutive closes over the previous day's high is what we need to see. All right, guys. See you guys next time.